Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. An indecisive spinning top pattern yesterday after the previous session's key reversal up and bullish long white Mariposa. Together they might just about make a possible tweezer top, but it is early on this idea at the moment. The top side was capped once again by the November 2020 low at 116.02 and by the nearby dark blue neckline, currently 116.35, that's just above, for the combined June to July head and shoulders top, which also has a double top formed from the head and the second shoulder. These resistances eroded what in any view was a strong bullish move. Prices closed right on the 2019 high and the rising green short medium moving average, currently 115.67. Further down we have, well, my best description would be limited supports from the February and January 22 highs at 114.95 and 114.82 respectively, as well as what was once an interesting and very shallow bright red neckline extension to the old August to September 2020 head and shoulders top, currently at 114.51. And that's also with the June 2020 high at 114.22. However, the best support comes from the rising mauve medium moving average, currently 113.81. Now, there is an argument that one should look at the last 3 days of last week as a possible bullish morning star pattern of some form, and I can see the argument for that. However, I still think for now the larger combined head and shoulders top and double top pattern is the more dominant. Hence, for these patterns, for the head and shoulders top, we have a primary target X1 down in the 113.10 zone with a harder to reach secondary target X2 down in the 111.41 zone. And for the double top, we had a primary target in the 114.55 zone, something I pointed out last week, and a secondary harder to reach target X down in the 113.22 zone. As you can see, the primary target for the double top has already been reached. Finally, as I've said now repeatedly for months and months, we are set up with 7 months of this year gone by for a possible annual key reversal here. Thus, if we close on Wednesday the 31st of December 2025 either over 110.36 or under 103.53, then we'll be on. Anything in between and we would have a lesser outside year pattern. I am at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. Now so far today, well, the beginnings of a leisurely pullback lower, possibly down through some clean air under the 2019 high. Cable, aka sterling against the US dollar. A slightly higher indecisive spinning top. There was also a second bullish white soldier yesterday. This is the sort of follow-on higher to the previous session's immediate countering key reversal up and bullish engulfing pattern on Friday, if only just on the latter. The base of this move up is the combination of the thin congestion band made up from the December 2020 low at 131.33 and the July 2023 high at 131.44. And prices now seem to be trying to stabilize over this breached lower trend line, currently at 132.57 of the mid-April to date expanding wedge pattern, currently 132.57 to 139.43. Though I don't really think that's really going to happen at the moment. It seems to be more on the upside than anything else. And that sits within an interesting congestion zone between 132.46 to 132.65. On the top side, prices punched through the March 22 high at 132.98. However, the main recent pattern here is still intact and was untested at any time yesterday. It is the mid-May to late July head and shoulders top pattern with a dark blue neckline, currently at 133.54. And we are still below this pattern. Interestingly, we also have in attendance to the neckline just below it and adding to its resistance, the slowly rising mauve medium moving average, currently 133.49. So back to the head and shoulders top pattern, and we have a primary target X below now in the 131.48 zone, which was reached on Friday, with a secondary harder to reach target X1 further down in the 129.40 zone. I should also note that last month was a monthly key reversal down here. Finally, much like Eurodollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday, the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between, and we would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year would be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. Now, so far today, a small move higher, but capped by the March 22 high and supported underneath by the combination between 132.65 to 132.46. It's not a very wide band. US dollar against the Japanese yen. A lower yet still indecisive spinning top yesterday. There was also a second bearish black crow. This followed on from the previous session's very strong immediate countering key reversal down and bearish engulfing pattern on Friday that left behind a 2-day pipe top pattern. Support below the market was from the 61.8% Fibonacci line, the July 23 to July 24 move at 146.69. Below this 61.8% Fibonacci line, we have the two moving averages of the now flatlining medium moving average, currently at 145.65, and the short medium moving average, currently 145.68, plus the dark blue middle time, currently at 144.94, of the important large, shallow and longer term early July 24 to mid-January 25 bearish shift pitchfork. This is one of two major patterns in operation here. And the other one is the broken bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target X for this was up in the 150.5 area and was reached last week, though we still have live a secondary, much harder to reach target X1 up at 158.85. Overhead, we have Fibonacci lines at 148.11 and 148.68, but the next significant resistance comes from the combination of the gold slowly declining long moving average, currently at 149.47. and the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Now, so far today, a dip lower, just below the Fibonacci at 146.69, but a swift move back up again, close to yesterday's open and over through it. Yesterday's open and over through it, and we're not looking like a hammer, but we're definitely looking like we're turning around a little bit at the moment in what is basically free air. US dollar against the CNH, the offshore Chinese yuan. A second bearish black crow yesterday and a follow-on to the previous session's key reversal down and bearish closing black Mariposa. The top side was capped by the congestion between 719.64 to 719.91, consisting, respectively, of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move, and supported by the flatlining green short medium moving average, currently at 717.96 below, though this was on a closing basis. Further up, we have resistance from the dark blue neckline extension, currently at 721.42, of the late August to early November 2024 reverse head and shoulders pattern that is just ahead of the now flatlining mauve medium moving average, currently at 721.95, and the flatlining gold long moving average, currently 724.59. In between the two moving averages, we have the congestion at 722.88, which tied in with the lows from earlier this year between January to March. For the mid-January to late April 2025 descending triangle, just ahead of the further Fibonacci supports at 714.95 and 714.48, that can be regarded as one single congestion zone. Finally, a strategic observation once again, and one I'll continue making here. Please note how the gold long moving average, currently 724.59, has been, despite some up and down waves, relatively flatlining for quite a while. So that if prices do stray too far away from it, then they seem to be brought back in towards it, and that applies in either direction. So far today, well, a reactionary move higher after testing the green short medium moving average below. However, the move higher has been limited. US dollar against the Brazilian real. A bearish open and close black Marobozo yesterday, and second bearish black crow. Following on from the previous session's bearish black Marobozo, there was almost a bearish long black Marobozo. This time the market was capped by the green short medium moving average above, currently at 555.18, with prices dipping and closing below the recent low at 551.03. Now further up we have the declining mauve medium moving average, currently at 563.36, and nearer the bright red upper time, currently at 558.49, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Now this pitchfork has been the showrunner here since spring. Interestingly, the mauve medium moving average is also close to the interesting and significant 38.2% Fibonacci line of the April 22 to December 24 move at 565.07. Meanwhile below, well, looking below, we have the purple May 2024 to date uptrend, currently at 542.78. which is within a congestion zone below, made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57 down to 540.16. Now this congestion also contains the dark blue neckline extension to the June to September head and shoulders continuation pattern. That's currently 542.53. US dollar against the Mexican peso. A third, this time a slightly smaller and higher, if still large, indecisive pattern yesterday. It was an indecisive spinning top after the previous session's larger indecisive doji cross, which also happened to be a key reversal down, if only just due to its long tongue on top and tail below. We are continuing to establish well over the bright red upper time, currently at 1863.20, of one of the two recent showrunners here, the robust bright red early May to late June bearish Andrews pitchfork. Plus, we're even higher away from over the other major recent pattern here, which is a many months old and breached many times, early May to late June dark blue bear channel, currently 1834.92 to 1860 even. As I said last week, and I quote, "This is enough of a breach higher that I should start considering topside areas." And these start with the green declining short medium moving average, currently at 1890.33. Followed some distance higher by a congestion band made up from the March 2020 low at 1915.03 and the 50% Fibonacci line of the November 20 to April 24 move at 1920.38. We're also set up now for a weekly key reversal here. End of quote. Well, the green short medium moving average was pierced on Friday and again yesterday, but it still managed to cap the market on a closing basis on both occasions. And yes, we did end up with a weekly key reversal up last week, and this offsets the quite extensive follow-on low from the original move down below the overhead very wide congestion band that eventually became a rectangle pattern and is centered on the September 22 high down at 2095. A 20 overhead band is centered at 2057.65. My apologies. Now, so far today, not much. A little higher, edging up over the green short medium moving average, and seemingly forming a new higher base over the congestion between 1876.94 to 1885.40. Now, topside, the next resistance come in a band between 1503 and 1920.38, made up from the March low and the 50% Fibonacci line of the November 20 to April 24 move, respectively.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.